Algorithmic trading utilizes computer programs to execute trading strategies, making decisions based on predefined criteria, and is becoming increasingly vital in modern investment strategies. Algorithmic trading involves the use of computer algorithms to execute rapid, automated trades in financial markets based on predefined criteria, such as price, volume, or timing. This method differs from traditional investment methods in its reliance on technology and speed of execution. Data analysis and automation play a crucial role in algorithmic trading by enabling traders to make informed decisions based on large volumes of financial data. Through sophisticated algorithms, data analysis helps in identifying patterns, trends, and anomalies in market data, allowing traders to make quick and accurate predictions. Implementing algorithmic trading in investment strategies offers the benefits of speed and precision, allowing for faster and more accurate decision-making in the financial markets. Risk management in algorithmic trading involves using quantitative techniques to identify, assess, and mitigate potential risks associated with automated trading strategies. This includes implementing stop-loss orders, position sizing algorithms, and portfolio diversification to minimize the impact of market volatility and unexpected events. Machine learning and AI have revolutionized the development of algorithmic trading strategies by enabling the analysis of massive amounts of data to identify patterns and trends, and to make predictions about future market movements. These technologies have the capability to process vast quantities of financial data at speeds unattainable by human traders, leading to more precise and efficient trading decisions. Algorithmic trading has been successfully implemented in investment strategies, leading to impressive returns for investors. For example, the use of algorithmic trading by hedge funds has resulted in consistent outperformance of the market. Adopting algorithmic trading in investment strategies poses challenges such as data reliability, model accuracy, and system security. Considerations include choosing the right algorithms, managing risk, and regulatory compliance.